Imagine your investment multiplying by 30 times its value. Now hold that thought. That's precisely the kind of exhilarating prediction that Cathie Wood, the CEO of ARK Invest, has made about Bitcoin. She's not just talking about a small percentage increase, but a staggering 30-fold increase. That's right, 30 times the current value. This bold prediction has sparked a flurry of excitement and speculation in the market. But why such a grand prediction, you might ask? Well, Cathie Wood is known for her forward-thinking investments and has often been right about her predictions in the past. She sees Bitcoin not just as a digital currency, but as a new kind of asset class, a digital gold, if you will. And she's not alone. Many financial analysts and crypto enthusiasts echo her sentiments. The idea of Bitcoin's value skyrocketing to such an extent doesn't just cause a ripple of excitement, it causes a tidal wave. Investors, both seasoned and new, are drawn to the potential of such substantial returns. The prospect of turning a modest investment into a small fortune is too enticing to ignore. But of course, with great potential comes great risk. The crypto market is notorious for its volatility, and Bitcoin is no exception. Prices can swing wildly in a matter of hours, and the risk of loss is as real as the potential for gain. Yet the allure of a 30-fold increase is a powerful motivator. It encourages investors to take calculated risks, to step out of their comfort zones, and to embrace the potential of this relatively new asset class. It's a glimpse into a future where digital currencies are no longer the outliers but the norm. And so, the Bitcoin boom continues, fueled by these bold predictions and the promise of unprecedented returns. The market waits with bated breath, watching the ebb and flow of Bitcoin's value, anticipating the moment when this prediction becomes reality. A 30-fold increase? Sounds like a dream, right? Let's delve deeper.
A single decision can unlock trillions. Enter BlackRock's Bitcoin ETF. Imagine a key that could unlock an enormous treasure chest, a chest filled with $19 trillion. This isn't just any key. This is BlackRock's Bitcoin ETF, a financial instrument that could potentially tap into a staggering amount of investment money, impacting a wide array of asset classes and generations. To understand the magnitude, we need to comprehend the scale of a BlackRock. BlackRock isn't just any financial institution. It is the world's largest asset manager, with more than $9 trillion under management. The launch of their Bitcoin ETF isn't just a drop in the ocean, it's a tidal wave that could lead to a significant shift in the financial landscape. This move by BlackRock isn't just about Bitcoin. It's about bringing cryptocurrency into the mainstream, giving institutional investors, pension funds, and even your everyday investor access to the world of digital gold. It's about breaking down barriers and making Bitcoin a part of the traditional financial system. Now, let's talk about the impact. The announcement of BlackRock's Bitcoin ETF application alone caused a 63% increase in Bitcoin's value. This isn't a mere market fluctuation. This is a demonstration of the substantial influence BlackRock has on the market. But this isn't just about the numbers. This is about generations. By bringing Bitcoin into the mainstream, BlackRock is creating a bridge that connects traditional investors with the new digital age. This isn't just about the baby boomers or the millennials. It's about creating opportunities for Generation Z and beyond. The launch of BlackRock's Bitcoin ETF is a game changer. It's a signal to the world that Bitcoin isn't just a speculative asset, but a legitimate part of the financial system. It's an indication that we are moving towards a future where digital currencies are not just an alternative, but a norm. A 63% increase in Bitcoin's value post-ETF application, that's the BlackRock effect for you. Did you know Bitcoin's energy consumption rivals that of some countries? Yes, you heard that right. This digital goldmine, as some may call it, is a bit of a power hog. Let's break it down. The Bitcoin network, which verifies transactions and mines new coins, uses a significant amount of energy. In fact, it has been estimated that Bitcoin's energy usage is higher than that of several developed nations.
The energy consumption is so high that it even surpasses the power usage of many of the world's largest tech companies. This is due to the process used to mine Bitcoin, known as proof of work. This process involves solving complex mathematical puzzles in a race to add the next block on the chain. The process is so energy intensive that it's been compared to solving a Rubik's Cube while running a marathon. But why does this matter? Well, with growing concerns about climate change, the environmental impact of Bitcoin's energy consumption is a big deal. Critics argue that the high energy cost of Bitcoin mining contributes to global warming and is unsustainable in the long run. Yet, the Bitcoin community counters these concerns with arguments about the efficiency of the network and the use of renewable energy sources. They point out that the banking system and gold mining also consume vast amounts of energy, and yet these are rarely discussed in the same context. However, it's important to remember that while Bitcoin may be decentralized and digital, it still has a physical footprint, and that footprint comes at a cost. To be a truly sustainable digital asset, Bitcoin must find a way to reduce its environmental impact. So, there's no doubt that Bitcoin is a game changer. It's redefining what we think of as currency, it's challenging the status quo, and it's opening up new opportunities for investment. But as with any groundbreaking innovation, it also presents new challenges. So, while Bitcoin might be a gold mine, it's not without its share of controversies. Bitcoin hitting $100,000 before the year ends, a far-fetched dream or a likely reality? Let's dive into this intriguing prediction that has been making waves in the crypto world. The prediction that Bitcoin will hit $100,000 before the year ends is rooted in the history of what happens to Bitcoin when it goes through a process known as halving. For those new to the term, halving is a feature built into Bitcoin's protocol that cuts the reward given to miners for processing transactions in half approximately every 4 years. This mechanism effectively reduces the rate at which new Bitcoin is introduced into the economy, creating a sort of artificial scarcity. In the past, each halving event has led to an impressive bull run. In 2016, a year after the second halving, Bitcoin's price soared from around $600 to nearly $20,000. The third halving occurred in May of 2020, and we witnessed Bitcoin reaching all-time highs in the months that followed. But why does halving lead to a price surge? It's simple supply and demand. When the supply of Bitcoin decreases due to halving and the demand remains constant or increases, the price naturally rises. The halving creates a buzz, attracting new investors and driving up demand. However, the path to $100,000 won't be a smooth one. Bitcoin's volatility is well known, and there will likely be significant price swings along the way. Despite the potential for short-term turbulence, many believe the long-term outlook remains positive, fueled by increasing institutional adoption and growing recognition of Bitcoin as a store of value. Bitcoin's journey has been nothing short of remarkable, from being worth just a few cents in its early days to reaching dizzying heights. And if the pattern of past halving events holds true, we could be on the brink of another extraordinary chapter in Bitcoin's story. So, is Bitcoin hitting $100,000 before the year ends a far-fetched dream or a likely reality? If history repeats itself, we might just see Bitcoin reaching new heights. Fungible, interchangeable, non-consumable, easily transactable. That's Bitcoin for you. The Bitcoin community holds a firm belief in the high-value asset nature of this digital currency. They argue that the beauty of Bitcoin lies in its fungibility, a feature that makes every Bitcoin equal to every other Bitcoin. This fungibility is akin to gold, where each piece holds the same value irrespective of where it's from or who's holding it. Then there's the convenience of transactions. Bitcoin can be sent or received from anywhere in the world at any time with minimum fees. No bank holidays, no borders, no bureaucracy. This ease of transaction, combined with its fungibility, makes Bitcoin a highly desirable asset. But it's not just about the practical benefits. The community sees Bitcoin as a symbol of financial freedom, a tool to wrestle control from traditional banking systems. Bitcoin is not just a digital currency, it's a revolution. What does the Federal Reserve have to do with Bitcoin? More than you might think. The Federal Reserve, or the Fed as it's more commonly known, is expected to cut rates soon. This is a form of easing policy, which has the potential to launch a new liquidity cycle. In simple terms, this means increasing the global money supply, providing a boost to the economy. But what does this have to do with Bitcoin? Historically, Bitcoin has followed liquidity cycles with other risk-on assets. When there's more money flowing in the economy, there's typically more money flowing into Bitcoin as well. This is because Bitcoin, like other risk-on assets, tends to benefit from an increase in liquidity. So if the Fed cuts rates and launches a new liquidity cycle, we could see a surge in Bitcoin's value. So as the world of finance turns, so does the world of Bitcoin.